Usually this video is put out on YouTube around 4 p.m. most days, but today is the anniversary of when my younger brother was shot and killed. So we had different things going on today, and I do apologize for this video coming later, but that's the reasoning for it, guys. So let's get into what I think is going to happen this week with AMC stock. As you guys probably do know, if you watch this channel and you have watched the last video that was put out, next week is going to be a total madhouse. You're going to get CPI, you're going to get Fed Jerome Powell, and that will be big for the markets and could definitely affect AMC very positively or negatively. But you also have another tailwind factor for this week, and it is the fact that the largest, or I should say the sequel to the largest blockbuster film of all time, comes out on Friday, and that is Avatar 2. And yes, Avatar back in 2009 is the largest grossing film of all time. So let's get into this whole situation. Obviously, go over the Ortex data, the technicals, the Stonko tracker data, literally everything you guys need to know about AMC, but not only that, as well as the broad market. So a jam-packed video for you guys. Let's get straight into it. So first and foremost, last week was very bad, and I've said it plenty of times. I'll say it again. Last week was so bad because of AMC Networks. Apparently, lenders are restructuring and organizing to kind of start to divvy up assets just in case the company went bankrupt. And AMC Networks, AMC Entertainment, names are very similar, and you were getting that backlash on AMC stock. That's why you dropped about 9% on December 5th. The next day later, you dropped 9.5%. The day after that, you dropped 10.37%. And then you did post a positive gain on December 8th of 0.33%. And then on Friday, falling 2.14%. So it has been very red over the last couple of days. The 1, 2, 3, 4, 5, 6 last days have been pretty red overall. You've lost like 40% in this time frame. So it hasn't been pretty, and that is the main reason for it. And until we get something fundamentally that changes for AMC, that we get a new update that's positive, I think the markets might keep spreading this narrative of AMC Networks, AMC Entertainment. They both have a lot of debt. They both have the same kind of debt in their bond market, right? There's a lot of comparables there. AMC in a better spot. Long story short, the markets don't give a shit. They are selling off AMC because apparently AMC Networks is restructuring and lenders are organizing together to divvy up assets in case they were to go bankrupt. So that in a nutshell is what happened last week with AMC directly. You guys know we got PPI, you got the Michigan Consumer Sentiment Survey. It wasn't good, wasn't bad. Some parts were worse, some parts were good. Overall, the markets didn't care too much about any of it. They are going to care about the data we have for this week. So coming on Tuesday, you're going to get the core inflation rate year over year and the inflation rate year over year, as well as month over month readings. And these are so important because this is CPI. This is the headline reading, and it's going to be on the 13th. And depending if this is higher or lower, it's going to affect the Fed's decisions. Now, if we look at the actual estimates for core inflation year over year, we're expecting a 6.2% reading. Last month was 6.3%. So it's not like we're expecting a huge drop here. So that's where I tend to lean a little bit more bullish, because if we were to expect a 6.2% reading, let's say come Tuesday, it comes out 6.1% or 6%. Which is very possible it could. That would be very bullish. Now, the other part of me wants to say, if we even got a 6% reading, if it's 0.2 under what markets expect, will the markets just say, hey guys, inflation's still 6%, this is not good, sell off stock? So there's a lot of those factors going on here, but that's only the start of it. This is on Tuesday. The next day, you have Fed Jerome Powell on Wednesday, At 2 p.m., you get the Fed interest rate decision. This is the report that comes out. We're all expecting 50 basis points, and that's the market's expectation. But you also get the summary of economic projection. So these only come out every 3 months or so. And essentially what it is every one of the Fed members, all the FOMC members, plot where they think interest rates will go by what year or by what time of the year. And depending on where the average consensus view is, that's typically where the Fed is going to take those rates. And markets right now, they're expecting 5%. But I've heard some people say that even if inflation remains stubborn around 5 to 4, 4 to 5%, maybe I said that backwards, 4 to 5%, well, maybe the Fed has to go excess of 6%. And maybe if they give us that indication, markets are certainly not pricing that, and it would be a negative thing. So that's just what I've heard. Keep in mind, we hear a lot of things that don't often come true. Now, you have the Fed press conference at 2:30 p.m. The last Fed meeting, the initial statement was very dovish, and then Fed Jerome Powell got onto his podium and dropped the mic on everyone. He sounded like a super hawk, even though the statement was bullish. So that's why at 2 p.m., off of that first read, you never want to make your final judgment, because anything can happen. Based off the statement last time, you would have expected something very bullish coming from the press conference, but that's the exact opposite of what we got. So those are going to be the two biggest things that will influence AMC. But also, like I said, on December 16th, you're going to get the first worldwide day of showing Avatar 2, and people might be excited about that in investing in AMC stock now, right? A lot of people, even when it's movie theater companies that has a big movie coming out, a lot of the time you can tend to see big moves in the stock just leading up to an event like that. Because I mean, once you get the numbers coming out for Avatar 2, if they are stellar, if they are rock solid, which I think they will be, the stock's probably going to react pretty bullishly. So a lot of people like to try to position for that, kind of like a company that markets expect to have good earnings. People tend to buy those companies up into earnings, and if those earnings are good, it might go up a little bit more. If they're bad, the company can fall off a cliff, right? So that's a little bit of kind of what I'm expecting. Now, for the rest of the week after that, nothing is going to be very important at all, but you are going to have on Thursday retail sales month over month. You're going to have initial jobless claims again, continuing jobless claims, and the Philly Fed. And these can be important. Retail sales will obviously be very important because we want to see, is the consumer doing okay? Are they starting to slow down? If they start to slow down, it could be one of those positive and negative things, because ultimately the Fed raising rates, what's the market scared about? Like, when, logically speaking, when the Fed raises rates, why do the markets sell off most of the time? Why? Just tell me down below in the comment section. Why do you think the markets sell off when the Fed raises rates? It is because the higher rates go, the more likely you are to go into a recession, which hurts valuations. Companies, they go bankrupt in recessions. It should hurt valuations. And that is why stocks fall when the Fed raises rates. So believe it or not, if, heading into 2023, if the economic data continues to look good, that's going to be very positive once the Fed is almost done with their tightening cycle, in which they are. And if inflation continues to come down, good economic data will start to be a positive thing again. Bad economic data will start to be a negative and start to induce that whole recession narrative even more. So hopefully that made some sense. Sounds ass backwards if you've been an investor in 2022, but the whole reason the markets freak out is recession. So there is all of that. That is it for economic data, guys. As far as the Ortex data with AMC, currently about $623.71 million worth of short positions on AMC, a 20% estimated short interest of free float. Free float out on loan sitting at about 31%. Shares out on loan 158.5 million. Days to cover sitting at almost 6. Cost to borrow at about 26%. The trailing 3 months at about 20%, and 100% share utilization. If we take a look at the live numbers we had gotten on on Friday, you are seeing about 104 million shares sold short, and you've seen almost 1 million shares on Friday alone be sold short. Cost to borrow average sitting at about 24.5%, cost to borrow max at about 30%, and cost to borrow minimum at 21.07%. So these numbers looking very, very good. And if you guys have not seen my theory on why this whole rumor started in the first place, go ahead and watch the last video. Essentially, it has a lot to do with the cost to borrow rates and the want of hedge funds to actually lend out stock when the stock is going down. There's a lot more people that are comfortable lending out at 20% short and 20% cost to borrow instead of a 100% cost to borrow rate, right? Big difference. And given these loans, essentially what it is, when hedge funds take out these short positions and they're paying this cost to borrow rate, you know, they can be variable. So a week ago, hedge funds were paying out a lot more for their short positions than they are today, and that's another big reason in a nutshell. And if you guys want the full in-depth theory on that, check out the last video. But nonetheless, guys, as far as the futures right now, futures down about 0.3% on the Nasdaq, 0.2% on the S&P, and about 0.16 for the Dow. Let's go ahead and now take a look at AMC on the chart and get into the actual price prediction here. So there's two ways, obviously, as every week there is, AMC could go. AMC could go up, it could go down. Long story short, that's a big shocker, right? And I know somebody's already in the comment section. Really, we could go up or down? No, watch the video, right? Watch till the end and you'll get the full thesis. For this week, since we have the CPI on Tuesday, the day before the Fed meeting, and then you have the Fed meeting on Wednesday, it makes this a lot more difficult, but it makes the end of the week after Wednesday more clear cut, because we're going to know, you know, does the Fed come out and say we're going to raise rates 50 basis points, then we're going to stop raising rates. We're going to wait and see what happens. You know, that could be a very bullish thing if you mix CPI also going down. It's hard to forecast those things. I would bet that is the most likely outcome, and that should be a very bullish thing for stocks, including AMC, stocks with very high short interest. But AMC also has, don't forget, that tailwind factor from the sequel to the largest blockbuster movie of all time coming out on Wednesday. So I think mix these two together, the most likely scenario from the Fed and the markets this week, and Avatar 2 coming out, you're probably in for a pretty bullish reaction in the markets. Now, this is just putting two and two together. We have also fallen quite a bit. Now, I don't expect a huge rally in the markets, though. Let's be very clear. Valuation has a cap on this rally, but I think we trade sideways until we actually see earnings estimates continue to come down in a big way, until we are declared into a recession, until the economy continues to weaken and weaken. You're probably going to be in a range. Now, for AMC, for the upside move, what I want to see is the stock getting above the 50-day moving average and closing above it as support again. And I think if it's a really good week this week, if, like I said, you got the positive factors on AMC from Avatar, if you get a lower than expected CPI, if you get a Fed that signals they will slow down or even pause raising rates and continues to signal that, I think the higher end range you'll probably get to, could be about $8, $8.50. This is going to be the 100-day moving average. And just like you could see right here, you can move a lot in a day if you do get these kind of developments that do happen, in which I think this week could be very prime for that. Just like over here, top to bottom, you move 25%, around 26% at the high of the day. If you did see a move like that from these levels, you're going to be sitting around $7.50 per share. You string together another 5-10% day here or there throughout the week, you could easily be sitting at this 100-day moving average. And I think that is my bullish case here. My bearish case is a lot more simple, because the low of 2022 is $5.05. I think the worst case scenario for this week, you fall to about $5 per share. I think you will find a lot of support around $5 per share if you get that negative reaction in the markets, which is, again, possible. And I think you do find support there because of the tailwinds of the business improving, but also it tends to be a very psychological level. And before you break major support, you tend to, sit there for a few days. You don't tend to just flush straight through unless you get company specific bad news, guys. So that is going to be it for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns if you are new here. Thank you guys for watching, and I will see you in the next one.